Welcome back to Alpha Recap, your aftermarket walk through the day's top sector stories. The markets closed with a clear theme: concentrated leadership in innovation and flows, and a lot of caution elsewhere. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. We've got a lot to unpack. AI headlines from Nvidia, big crypto flows, energy geopolitics pushing oil back above $100 a barrel, and legal and policy noise that really reshuffled parts of the market.
Exactly. So, what really stands out here is how narrow the rally was. A handful of tech and crypto names drove most of the upside, while finance, communications, and some consumer stocks were under pressure.
Right, and that narrowness was obvious all day. Nvidia's GTC commentary, the trillion-dollar-plus chip revenue talk, and a DLSS 5 reveal lit a fire under AI and semiconductors. Meanwhile, Apple's product move and a strategic acquisition created momentum in software-adjacent names.
And on crypto, institutional flows into spot ETFs plus big on-chain buys pushed Bitcoin toward about $75,000 and sent Ether up roughly 10% intraday. I mean, when you step back and look at this, those two stories, AI and crypto flows, really explain why some pockets were ripping and most of the market was stuck.
Yeah, that tracks.
Let's hit the big outperformers first. Tech-led, powered by Nvidia, and an Apple bump tied to a $599 product push and a Motion VFX acquisition. Analysts noted the day was decidedly pro-cyclical for semiconductors and AI infrastructure.
Honestly, I was a bit surprised by how much Nvidia's narrative acted like a demand proxy. It spilled over into data center builders, industrial automation suppliers, and even utilities connected to grid upgrades for data centers.
Right. And the other thing is materials. Positive M&A, long-dated offtake deals, including a rare 5-year deal, and capacity expansions in recycling supported miners and specialty materials names today.
And utilities had a constructive angle too. Community solar wins and the finish of Vineyard Wind 1 pushed some renewables and energy transition suppliers higher, even though rate sensitivity capped moves.
Big energy headline. Vineyard Wind 1 actually finished construction today. And we also saw an underground small modular reactor project break ground. Those are tangible milestones for transition capex.
Right. And yet, the day was not uniformly positive. Energy was mixed because crude got a geopolitical bid. Middle East disruptions and the Fujairah loading situation nudged oil back above $100 a barrel, which sent traditional E&P names into a more cautious trade.
Exactly. Higher oil helps producer cash flows, but raises input costs broadly, which can weigh on margins in consumer and industrials. Now onto the underperformers. Finance felt heavy. Fintech MoCaFi filed for bankruptcy, and there were court rulings that changed regulatory exposures for some banks and financial firms. That created a sensitive tone across the sector.
That MoCaFi filing reverberated beyond one tiny fintech. Analysts noted increased scrutiny on fintech balance sheets and consumer credit exposures.
Communications and media had mixed headlines. Award season bumps and casting wins were offset by infrastructure hiccups, like a halted subsea cable and some lingering legal tangles that left the group range-bound.
And consumer and retail saw a similar story. Some automation and funding wins, but headwinds from traffic softness, labor disruptions tied to JBS supply noise, and legal fights, including some high-profile social app litigation.
So to summarize that part, bifurcation. Concentrated gains in AI and crypto, selective positives in materials and utilities, and caution across finance, communications, and parts of consumer and real estate because of legal, policy, and geopolitical risk.
Yeah, absolutely.
Let's walk through the cross-sector themes that tied all this together. First, AI and chip demand cascading across sectors.
Nvidia effectively became a signal for broader capex. When the company discussed a multi-year chip opportunity, that lifted not just GPU makers, but server OEMs, specialty materials, and even utilities who might see more grid demand from new data centers.
Second, flow-driven crypto moves changed risk appetite. Spot ETF flows and large institutional buys compressed risk premia, which benefited crypto-linked equities and some fintech names. But analysts warn this also increases sensitivity to regulatory headlines.
Third theme, energy transition versus near-term oil risk. You had concrete transition milestones, like Vineyard Wind 1 and the SMR groundbreaking, while Middle East incidents pushed oil above $100, showing that short-term shocks still matter.
Fourth is legal and regulatory risk as a market governor. Court rulings, bankruptcy filings, and state-level policy moves kept volatility elevated in finance, communications, healthcare, and cannabis.
And fifth, capital deployment and M&A underpin cyclical confidence in materials and real estate. Those 5-year offtakes and a big $1.2 billion real estate acquisition signaled that long-horizon commitments are still being made.
Quick reactions, short takes.
Big move in AI today.
Crypto spike was notable.
Regulatory headlines stole the show elsewhere.
Let's dig into the day's most significant moves with context. 1. Nvidia's GTC announcements acted like a sector-wide demand signal, prompting analysts to reassess peers and hardware supply chains.
2. Crypto rebound, spot ETF demand, and big on-chain buys, including a reported purchase of about $56 million of Ether, pushed Bitcoin toward about $75,000, and Ether up roughly 10% intraday. That felt like institutional validation.
3. Vineyard Wind 1 finishing construction and an SMR project starting construction. Tangible CapEx milestones for the transition story, supporting suppliers to offshore wind and advanced nuclear.
4. Oil above $100 amid Middle East disruptions. A reminder that short-term geopolitical risk can quickly tighten physical markets and change inflation dynamics.
5. Mocafi's bankruptcy and court rulings changing regulatory exposure, increasing scrutiny on balance sheets and compliance across fintech and some banks.
6. Materials, M&A, and long-dated offtakes at conferences like PDAC, suggesting that buyers are locking supply, which reduces volatility for miners and supports CapEx planning.
7. Healthcare remained event-driven. We saw a small-cap biotech jump after positive clinical data, which is a reminder that clinical readouts can produce binary, outsized moves.
And 8. That $1.2 billion real estate deal showed institutional appetite for core and redevelopment assets, even as financing conditions remain uneven.
So what should listeners be watching next? A few practical informational pointers. Monitor earnings and guidance windows in tech and semiconductors. Nvidia broadened expectations. Server demand and OEM order books will determine whether that momentum is durable.
Track crypto ETF flows and regulatory calendars closely. With Bitcoin near 75,000 and Ether up about 10% today, quarterly filings and ETF inflows could flip sentiment quickly.
Watch energy risk versus transition pipelines. If oil stays above $100, that changes producer cash flows and corporate guidance. At the same time, project completions like Vineyard Wind 1 create multi-year revenue pipelines for suppliers.
Read legal and regulatory headlines as potential sector catalysts. Court decisions are often high impact and non-linear, so carve out time to assess rulings rather than just macro prints.
And follow material offtakes and M&A for supply chain clarity. 5-year contracts give companies more revenue visibility and influence CapEx decisions downstream.
So, what really stands out here is that headline-driven volatility is likely to persist. Event risk is the name of the game.
Before we wrap, let's give listeners 3 clear takeaways from today.
1. The rally was concentrated. AI and crypto flows powered most of the upside, creating a very narrow leadership base.
2. Energy showed a 2-track story. Tangible transition milestones on one side and near-term oil risk on the other, which complicates inflation and input cost outlooks.
3. Legal and regulatory events remain significant market governors, especially for finance, communications, and consumer names. These are often stock-specific, but can compress sector multiples.
Final reminder, this episode is a market recap after the close. The moves we discussed already happened. Markets closed mixed with a narrow set of leaders today.
If you want more details or have a question about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next trading day to walk through the headlines and themes that matter. Stay curious and ask us your questions at stockalpha.ai.